Procter & Gamble shares are down in pre-market after revenue came in slightly below estimates. The consumer giant that makes household staples such as Pampers and Tide has been facing pressure from competition. Brooke Sutherland, Bloomberg Opinion columnist, joins us now. So organic growth, not so much?
Not so much this quarter.
Alexism.
You're having an effect on me. This is dangerous.
Rubbing off on each other. Not so much this quarter, not so much this year. Organic growth for fiscal 2018 was at 1%, missing that 2 to 3% goal that Procter & Gamble threw out there. I will say this was not unexpected that they were going to miss this, because 9 months through the year they were not anywhere close. Procter & Gamble had already said they're going to be at the low end of their guidance. But coming in at 1%, missing by a full percentage point, the guidance, I think, is maybe a little bit more than people were expecting.
But a fair number of analysts said you're not going to make 2 to 3. In fact, Bloomberg Intelligence, their review this morning, said they're not going to make 2 to 3%. So why do they keep saying 2 to 3% when no one believes them and they're not doing it?
Well, I think that sort of goes to the point of managing investor expectations. That's part of the reason why you saw Nelson Peltz come in here and sort of push for changes, saying that you make all these big promises on cost cut, on improvement. We don't really see a lot of that filter through. And so I think part of what he's trying to do on the board, hold management more accountable, force them to follow through on these goals and to take sort of definitive steps that will improve the business.
And what did they say about pricing power, if any at all?
So they did say they're going to roll out price increases on Pampers in North America, Bounty, Charmin, and Puffs. But I will say they got hit on pricing in a lot of their key categories in this business. You know, you're still seeing that in grooming. You're seeing that in baby care. They've said that they had to lower prices on their Loves brand because of competition from private label. That's a siren should be ringing. That's Amazon right there. So, you know, you did really see that weighing on the results. And I think it's going to be harder for them than some of these other companies to push through price increases to counteract the tariffs, which Procter & Gamble is very much subject to.
Well, I was going to say, what about costs? What about the input costs?
So EPS did beat estimates in this quarter, which is a credit to the cost cut initiatives that Procter & Gamble has been rolling out. So they are able to offset some of the impact of the tariffs and the rising raw material costs. And I think the question is, are they going to be able to continue to do that? Now, their guidance for next year suggests that they believe that they will, but I think this is very hard to predict. And I think especially in their markets where you're seeing so much competition, so much pricing pressure, are they going to actually be able to push those through enough to offset the rising costs?
No, especially when the wages are not really picking up the way that they necessarily need to as well. So there's that.